Welcome back to my morning report on Friday the 6th of May with me, Richard Perry, market analyst at Antec Markets. It's non-farm payrolls day. So let's have a look at the euro. Basically, we get the euro flat ahead of the payrolls report normally, and it seems to be what we're seeing. We've seen 3 days now of pretty sharp decline, actually. You've lost about 200 ticks on euro in 3 days. And yesterday's bearish candle was around about 90 down on the day, 80, 90. And it sort of took you back into the old long-term band below that 1465 breakout level, and it sort of now is testing the next support. The next support that comes in around sort of 1395, between sort of 1385, 1395. These sort of old highs here, and that's pretty much how where we found yesterday's low, 1384. So that is your line of support today ahead of payrolls. And if you get that broken, then you're sort of then you're going to be testing the next line of support, which is this old range here, and also was a breakout as well. So that's 1330 is that support there. So sort of 1330 is the sort of downside support. But if that 1330 level got broken, say for example you got a strong payroll support, then you'd be possibly on the way back towards this key April low again, 1213. But you'd be saying at the moment, technically speaking, this sort of breakout level, breakout move that we had earlier this week, I don't necessarily think is all that strong in terms of the technicals. But you look at the MACD lines, didn't really confirm the breakout. The stochastics only just went overbought and then turned lower again. The RSI turned lower from 70. So I wouldn't say that's necessarily the strongest technical breakout I would have ever seen. But I'm still thinking that this is going to be a correction that ultimately gets finds support and pushes higher again. I think around sort of 1330, it's where you start to find the support coming in, and I think that's ultimately where you may well start to see the next low. I'd be very I'd be turning around my outlook if you saw a break below 1213, this reaction low from April. But certainly, I think that this current move is just sort of unwinding some of that positive momentum. But I still think that there's further upside to be seen. And as I said, that's the 1330 support level, which was sort of an old floor, an old pivot, you could argue. So I think coming back towards there is likely if you get a strong payroll support today. That's around about sort of 80 ticks down from where we are now, and that could be seen. But the hourly chart is slightly more correctively configured, isn't it? I mean, the MACD lines are quite significantly below neutral, and the RSI sort of went towards 20, and it's now unwound, isn't it? Actually, so it's if it's sitting here around the payroll support, you'd say there's still a slight bearish bias that has been unwound, but there is still room, I think, for further correction in this move. But I'm not expecting the move to be enormous. So I wish you good luck in your trading today, and I will speak to you later. Thank you.